tax triggers led to a huge slowdown in activity. So production down about 37,000 barrels a day, about 2.5%. Rig count down drastically. In January, the rig count was down 21 from December. February followed that up with another drop of 27, and today we're at 111. That's the lowest we've been since April of 2010. And it's really mostly about, it's really mostly about oil prices. Price today, Flint Hills, North Dakota Sweet is $32 a barrel, and that's the lowest we've seen since February of 2009. So very low oil prices, very cold weather. The one thing that was up significantly was uncompleted wells. Big jump in uncompleted wells to 825 wells in that inventory. That's up by about 100 wells, or 75 wells, I guess, from the December number. And you can just see that that inventory of wells continues to grow and grow and grow. Companies are making the $4 million investment to drill the wells, but they're holding off on the $4 to $5 million investment for the completion until they can see a little bit better oil prices, until they can see what the taxes are going to be. And so they're just holding off on more and more and more. That's going to lead into some discussion about what's that going to do for production overall. And then the last thing that I did want to mention was industry beat the gas capture target of 77%. They beat it by 1%. So if you include all the confidential wells, I think Justin will have a slightly different number. But if you include all wells, confidential and non-confidential, capture was 78% statewide, 78% in the Bakken.
It started, but we lost it.
Okay, sorry about that.
Oh, are they trying to reconnect?
We'll just hold on.
Okay, I will go find where my guy went. I don't know what the problem is.
Just okay. All right. I think maybe the only surprise at all in the numbers as we look at them is that the Fort Berthold reservation numbers actually showed significantly higher gas capture than statewide, 1% higher. And then when you look to the trust lands, which traditionally by industry have been identified as the potential problem spot, they're actually at 80% capture. So I think people will be surprised to see those numbers come in and see that on Fort Berthold and particularly on trust lands, gas capture is actually measurably higher than it is on a statewide basis and much better than the capture targets that we have for 2015. So just before we go to tax triggers, just to kind of go back and talk about rig count. If you compare the December number of completed wells and the production increase we saw in December to the January number of completed wells and the production decrease, you can pretty quickly calculate that we need 115 wells completed every month to maintain 1.2 million barrels a day. So if we are not drilling and completing 115 wells, we will see production decline. And at 111 rigs, that won't happen. So at the current rig count and the anticipated rig count, we're going to see some months of declining production. And then our anticipation is that probably in June, particularly if the large tax trigger kicks in, we'll see a big surge in completions for two reasons. One is the economic effect and having, we'll probably have 800, maybe close to 1,000 wells in inventory by that time, uncompleted wells. And the second big factor is that state rules require a well to be completed within a year of the drilling rig reaching TD and running the liner in the well. And there's going to be 125 wells that have to be completed by June 30th out of that inventory of 820. So, with that in mind, at 111 drilling rigs, we're not at 115. We're going to see declining production, but then we're going to have some periods where they dip into that inventory to maintain cash flow, to maintain production, to be in compliance with our rules, and we'll see some big peaks in production that we'll work off of. Overall, expect to maintain 1.2 million barrels a day or slightly below that. So with that, I'll let Ryan talk about tax triggers, and then we'll open it up for questions.
Okay, well, thanks, Lynn.
I think we can hear that, but
Okay.
put it on just in case.
Okay, well, thanks, Lynn. I guess following what Lynn had said, there aren't really any big surprises in regards to where prices are at, where production is going, and I don't think there'll be any surprises with the tax triggers, which I explained last time. I'll do a quick overview of price triggers or the oil tax triggers from last time, but then talk about the small trigger first, then the big trigger. We do have two triggers in place in North Dakota. The small trigger kicks in once the NYMEX price is below $57.50 for 1 month. That did happen in January. The average price was $47.98. So starting as of February 1, we did have all new wells that were drilled after February 1 are eligible for that incentive. It's important to note that trigger does not trigger off, and again, it's only for new wells, does not trigger off until the NYMEX price is above $72.50. So there's a window there. There's two prices. You can trigger on at $57.50 or below. The incentive for new wells does not trigger off until we have 1 month above $72.50. To Lynn's point, the incentive will really kick in when drills are completed. At least the clock will start ticking for that incentive once wells are completed. It's for the first 18 months. It's for the first 4.5 million barrels of gross value produced or 75,000 barrels produced. So that is an incentive that could be applicable to that inventory of uncompleted wells out there. So that is one incentive that could help relieve the financial burden and complete those wells that are out there in inventory, yet unfracked. I do expect, based on the conversations we recently had, based on revenue forecasting, that the small trigger will be in place for quite some time. Again, it's only for new wells. So the financial impact is limited to that, relatively right now around $150,000 per well for the life of the well. So again, that is a somewhat fiscally limited consequence from the small trigger. Again, hence the name small trigger. As far as the big trigger goes, that is a different trigger price. As I mentioned in January, that trigger price currently is $55.09. Again, the NYMEX price has to be that. That's the daily close for an entire month, has to be an average. That average of the daily close has to be below $55.09 for the big trigger to kick on. Now, it has to be 5 consecutive months. That's why it's the big trigger. It does take 5 consecutive months being below $55.09 for that to kick on. Based on January prices and February prices, and looking where we're at now in March, we're basically for sure 2 months in. January and February were both trigger months. Again, it was $47.98 in January and just slightly above $50 in February. And looking at prices in March will likely be another trigger month. We would have to have prices really in the around $60 or higher for the rest of the month, probably, for it not to be a trigger month. So the likelihood of March being the third out of 5 consecutive trigger months is very likely. With that being said, we are, from a forecasting standpoint, considering that, assuming that the large trigger will kick on. And when that kicks on, and I'll again cover exactly what that does, it basically trumps the small trigger because it is a much broader application of a tax exemption. If the big trigger kicks on, basically the first 24 months of all production is exempt from the extraction tax in North Dakota, as opposed to a reduction in the tax as with the small trigger. This would be an exemption for 24 months for wells, for the first 24 months of production from an individual well. After that, the rate would go up to 4%. As I mentioned last time, around 70% of all production in the state is less than 24 months old. Because of that, it has quite a large fiscal impact. We are considering that in the forecast coming up, that, and again, assuming that not just the small trigger, but the big trigger will kick in and be effective starting in June for at least a part of the next biennium. So that is where we're seeing a large cutback in the extraction tax forecast for the state. That being the case, it really is in the billions of dollars. But also we're taking into account in the forecast the lower sales tax, income tax, and corporate income tax collections associated with fewer drilling rigs operating and fewer wells being drilled.
All right.
Right. Well, we've already got a slew of questions. The first one, I was actually just trying to look up the answer in case you didn't have it off the top of your head. The last time, month and year that oil production dropped was actually from September to October of last year.
Okay, thanks for answering that. Last time oil production dropped was October
Right.
of 2014. Okay. And we had a similar small number of wells completed, I think, in the October timeframe. And that looks like the trend now through May. So we could see production numbers dropping off and getting down to that 1.1 million barrels a day, or maybe between 1 million and 1.1 million barrels a day. And then we anticipate June to be a really big month in terms of completions and production increases. So we're going to ride these waves of production increases as people work on that inventory.
Okay. We're slightly under 1.2 million barrels a day now. Are either of you worried about falling further and losing state revenue, or will that average out over the year?
Well, the revenue forecasting group met yesterday, as you know, and they talked a lot with industry folks. I had quite a bit of input into that, as well as did the Moody's people who track world oil prices and kind of the overall impacts on North Dakota's economy of all these changes, and decided to use 1.1 million as the base number. So I think there's a lot of consensus around that being the low end of the production curve. And even industry is saying that just their corporate requirements, keeping their stockholders happy, keeping their bankers happy, they have to complete a certain number of wells in the first half of this year and to maintain cash flow. And that by itself is going to keep us, we think, above that 1.1 million number, or right around there.
Okay, we'll stick kind of with that revenue. How much do you estimate the revenue drop will be from the big trigger? And what effects will be related on sales tax and other tax drops?
Well, based on the January reforecast, we'll have official numbers next week based on what Lynn was saying. We're actually going to pull back the production numbers just a bit. But just to put things into perspective, when the January reforecast came out, taking into account lower prices, lower rig count, the entire, and I'll just say this is all of oil taxes, not just extraction tax, but based on the lower price and the trigger kicking in for 10 months, we assumed total oil tax collections would go from 8.3 billion to about 4 billion. Again, that's not just a trigger impact. That is mainly a price impact, but the trigger exemption and reductions do have a part in that as well, of around probably about $1.5 billion. So the majority of any of that reduction is price related. The rate change then has the smallest part of it, but still large.
And I think the revenue forecasting group also took a look at the impact on royalties. You saw the study that came out a couple of days ago that was industry supported, showing that 40% of those royalty checks are mailed to a North Dakota address. And there's also the legislature last session implemented withholding on out-of-state royalty owners. And so that has a very significant impact on income taxes, but that's built into the new forecast, as well as what we think the impact is on sales taxes and the impact on income taxes of less people working because of 111 drilling rigs instead of 191. And those are all mostly general fund impacts. Right. It looked like maybe an 11% drop in that neighborhood in general fund revenues, around 550 million.
And that is following very closely to what we write. And the January forecast was almost solely reforecast, which will track fairly closely to this official reforecast here for March, was almost solely based on lower rig count, the sales tax estimated per having fewer rigs in the state, and then estimating per well drilled how much less we bring in sales tax. Fewer overtime hours. Right now, we're hearing the first thing that's being reduced would be overtime hours out in the oil patch, so lower gross salaries because of that. And then also, of course, royalties. Whether you're in state or out of state, a person actually owes tax on royalties. So whether you're resident or not, all of those royalties should be owed income tax in the state. So that is another large factor that played into the reduction in the general fund forecast.
And to clarify for folks, the forecast is for 1 year or for a biennium?
It is for a biennium. We meet the forecast that we have in North Dakota is based on a 24-month period. The legislature only meets every 2 years, so we have to budget for a much longer time frame. So it makes it very difficult to predict oil prices, let alone 12 months out, but 24 months out.
Okay, and Dave, I'll let you ask, but I want to remind folks to keep the questions to the relation of our oil and gas taxes and/or the director's cut. Also, if you don't catch something, I am recording, so I can send you the recording when we're done. So please keep that in mind. Dave, go ahead.
Also, a little bit tangential, but do you have any figures about any kind of job losses due to the dropping of rig counts? Do you know anything about the jobs?
Yeah, the question was with regards to job losses due to the declining rig count. And we know that the drilling contractors surveyed the drilling contractors last week, and they have gone from 1,600 full-time employees to 800. So the reduction in those high-paying drilling jobs is at least 800. Now there are a lot more people work around those drilling rigs than just the 30 or so that are on that crew. So you kind of have to multiply that number by 4 or 5 in order to get the actual impact on the number of people associated with a drilling rig that have been laid off. So we're talking in the 3,000 to 4,000 range at this point in time.
And stay along those lines, what do you think the bottom of the barrel rig count could be?
We've been looking, I track this constantly virtually on a daily basis these days. And this morning, when I pulled up the numbers, I saw 111 rigs operating. I also pulled up my table of where the major drillers say that they're going by mid-year, and there are another 10 or 11 rigs on the chopping block. So we see the bottom of this thing at 100 drilling rigs, which will impact significant additional jobs. And drilling contractors talked about some of those first cuts were not quite so painful because it was the inefficient rigs and that sort of thing. But they're at the point now where they're having to send home people who are hard workers and high efficiency drillers, and it's becoming painful for them out there in the oil patch. So to answer your question, the bottom is down there around 100.
So sticking along those lines, and then a question about, well, could production jump in June then based on the trigger scenarios? Do you have any forecast for that?
I haven't forecasted what I think the increase is going to be, but just the fact that there's 125 wells in that inventory that have to be completed because the clock is running out on the rules for their completion. And then, normally we're having anywhere from 50 to 100 wells completed. So we anticipate June to be a really high month in terms of an increase, maybe double what November to December was. We saw a 40,000 barrel a day increase there in the neighborhood of 75,000 to 100,000 barrels a day coming from that surge. A lot of that, of course, is going to depend on what the weather does. Does it dry out and the load restrictions come off? And also on the availability of frac crews. We're hearing that the fracking companies have not been reducing their prices and that they've been hanging on to their employees, and they're anticipating this same factor. And so they're keeping their employees and running their schedules and planning for that.
Okay, I've got a question about completion.
Okay, go ahead.
Okay, any idea or theory about why completions swing wildly from month to month? They change quite frequently.
In terms of the volatility in the completions, I think it has more to do with oil price projections and perceptions than anything. And of course, January was the bottom of the oil prices in terms of the big decline. But it looks like we're headed into a double bottom here. It looks like we had an increase, and now we're sliding back again in terms of oil prices. Looking at today's prices, world WTI and North Dakota. And so these companies try to time this to match with having to do their quarterly reports to their stockholders and all of that. And I think all those factors create that volatility. What's the oil price doing? What do you think the oil price is going to be next month? When do I have to make a report to my stockholders or my banker? And there are just too many unquantifiable factors in there for us to make any kind of reasonable prediction. Other than we know in June, there's a bunch of wells that the clock's running out. They have to be completed.
Okay, one more completion question, then I'll take yours, Maxine. You might not have it, we might have to follow up, but over the last 5 years, do you have roughly the monthly average for uncompleted wells?
I have the numbers. I don't have them in my brain, but I do have them in my computer.
Yeah, we'll follow up with that.
We'll follow
Go
up
up
with that.
next.
Turning to flaring, what's happened on the, is there anything particular on the reservation that's caused that number to go higher? And is this the first time they've ever been higher than in gas capture than anybody else?
I'll answer the second question first, and that answer is yes. This is absolutely, I'll repeat the question. Flaring, with regards to that, what happened on the reservation to make them higher than the statewide average? And then is this the first time that's ever happened? And the answer is yes, first time it's ever happened. The reservation has always trailed the rest of the Bakken and Three Forks in terms of infrastructure and rights of way and all of those things. What happened on the reservation is that the two gas gathering companies really went into an enormous infrastructure investment process in the last half of 2014. There were 10 new compressor stations brought online on the reservation lands in the last half of 2014. So a lot of the bottlenecks that were causing flaring to be high on the reservation lands were wiped out. There's a small part of the reservation that is still bottlenecked, but the Whiting acquisition of Kodiak, they went out and installed several dozen well site stripping units to put that gas to beneficial use. So it was a combination of two factors, primarily all that compression going online in the Mandaree area, but secondly, all of those well site units going on in the Twin Buttes unit, or the Twin Buttes area. And yep, first time ever that the reservation numbers were higher than off reservation. So it's good news. It's encouraging to see that you can get this done. This is not an impossible task.
Do you see is there other improvements they're going to be able to do, or are they kind of stuck at 80 now for a while? They done what they can do kind of thing?
They haven't done everything they can do. There is a major trunk line that is intended to go from Johnson Corners over to Newtown. And it got stalled out because there were some plans by the tribe to put a landfill in the path of that trunk line. And it looks like by this summer, they should have that resolved, and a good possibility that that trunk line either can be moved to a different location, or they'll decide not to put the landfill there. That'll be a big piece of that infrastructure. And then our largest gas gatherer, One Oak, is making enormous compression investments in the Banks and Charleston and Antelope area this summer as well. So we're going to see a pattern similar to what we saw in the last half of 14 happening just outside the reservation and in that northwest corner of the reservation this year during the construction season.
How was the state able to, statewide, be able to meet the benchmark? Was it an infrastructure thing too, or was there cutbacks on production, et cetera?
Good question. How did the state manage to get to the benchmarks, and what happened? Part of it was infrastructure, and part of it was voluntary production restrictions. I think the larger part was infrastructure, some new compression projects coming online, and Hess has managed to increase processing at the Tioga gas plant, even though they're bottlenecked at Hawkeye. We also saw the system there at, and I gave this report to the commission at Springbrook. Savannah had asked for that exception for December and through March. But even in light of that exemption from the flaring requirements, they dropped flaring in that area from 80% down to 20%. So a couple of pretty significant infrastructure changes. We are hearing, I heard from one operator that they have 5,000 barrels a day voluntarily curtailed. I know of another operator who has a 7-well pad voluntarily curtailed. So we are looking at 15,000 barrels a day of curtailed production too, in order to get us to that 78.
That was going to be my next question. Was it 12, 15 overall?
Yeah, the 12 to 15 would be statewide.
Back to the reservation, who are the two midstream companies within Fort Berthold?
That would be Arrow and Targa. Targa.
Okay, we are running up against our time deadline, so I think that's all of them that I see. I'm just doing a quick.
I just have a question. I just have one more.
Yeah.
You probably expected this one from yesterday. During the discussion, during the hearing, you were asked about last month's statement about not hitting the trigger or whatnot. I just figured that perhaps maybe you want to comment on that. You kind of backtracked on it yesterday.
That's a really good question. And yeah, I'm going to repeat the question. What about this change in attitude about the trigger? And you recall that just a month ago, I was saying I thought it was unlikely that we would hit the big trigger. And that was based on history and the very high bar of 5 consecutive months below $55. I think when you look at the overall historical odds, we've had more years of trigger off than trigger on. The big surprise and the big change is crude oil inventories across the country. Just last week, I found out that Cushing, Oklahoma is 70% full and is filling at about 1 million barrels of oil a day, which means it runs out of storage capacity sometime between April 15th and May 15th. If that happens, then the Brent to WTI differentials just really expand, double. And our trigger price is based on WTI. So when I heard that information, and then I started looking at the other storage areas, thinking, well, maybe they could transfer oil out of Cushing and move it someplace else. There's only one other place that has any room, and that's in Houston. And for whatever reason, they're not transferring oil out of Cushing to Houston. I think probably the main reason is that from Cushing, they can access any oil market in the continental U.S. From Houston, not so much. They're stuck with the Houston refineries, and they have to compete with oil coming in on the water. So the big change, and you're right, big change from unlikely to very likely, and all has to do with storage in Cushing. They're at 70%, and if we keep filling it at the current rate, we're full around the 1st of May, and that's WTI.
Okay. Thank you. All right.
Thanks.
We'll have Mr. Kringstad step up to the plate. Thank you, Commissioner
Thank you.
Maxter, for joining us again.
All right, well, good afternoon. Justin Kringstad, Director of the North Dakota Pipeline Authority. I will get going. I've got my standard set of slide materials, and I've got some additional information on just some project updates and forecasting updates on the crude oil side. So not much of a change. Again, I had to break this into 2-year segments as far as crude oil production in the Williston Basin. Did not have any recent Montana production figures updated to include in this table. But I would suspect that along with North Dakota's decline, that we may likely see a similar trend on the eastern Montana side of the border. When I took a look at estimating how that crude oil was moving for the month of January, again, very similar trends that we've seen historically. Everything just got shifted down a little bit just because of the overall production numbers being down in the basin. The one thing you will notice during the month of January, we did see a tightening up of that Brent WTI spread. However, as we sit here this afternoon, we did see that widen again since that January timeframe. We're back up around a $10 spread between Brent and WTI. So we'll see what type of impact that may have on the coming months of how that crude oil may get moved out of the region. Again, with the consistent with the consistent percentage going on rail, but the production numbers down, we had imports coming in by truck into North Dakota down. So we did estimate a reduction in the amount of rail traffic leaving the state. So now we're under that 800,000 barrel a day mark that we had gone over at the end of 2014. Slide 7, this is just updating everyone on just where the crude prices are, that Brent WTI spread. So again, as I mentioned, just over $10 as of this afternoon when this was put together. One thing I have updated, this is independent of what the tax department and Lynn's office does on the production forecasting. So I do a production forecast not only for North Dakota, but for the Williston Basin as a whole. So this does include eastern Montana production in there as well. I've got 2 different cases. I'm not saying one is more likely than the other. You'll see in the next slide what some of those assumptions are. But even in the higher of the cases, we're looking at kind of a hold even production level in the near term. And then as time goes forward, production continues to rise. So when we look real long term, not just at the next biennium, if we look at production trends in the next 15 plus years, we still do expect production from the region to continue to rise, even though we are experiencing this depressed activity level. The difference in those 2 cases, you can see case 1, the higher of those 2, represented about a 44% slowdown in completion activity relative to the end of 2014. And then in case 2, even more pessimistic, about a 57% slowdown in activity. So you can see what those 2 different scenarios does to production levels in the area. And then you'll also notice the duration. Case 1 is a little bit more optimistic, about a 2-year slowdown, and then activity starts to pick up. Case 2, again, much more pessimistic view in that we've got a longer duration of low activity levels and then a slower ramp up in activity when it does pick up again. So again, I just wanted to put 2 cases out there just so folks that are interested can see kind of longer term, what do we expect for this region. When I take the future production expectations, we take a look at how we're going to move that crude oil to market. This was also just recently updated with some new project information. Again, you've got on slide 10, the 2 production curves and then the takeaway options. And so the green, the yellow, and a very thin red, if you can see it above the yellow, those are pipeline and refining options. And then that kind of gray colored section of transport is rail capabilities. So you can see in the near term, still short on pipeline capacity, needing additional takeaway through the rail. Going forward, you'll see as 4 projects that I'll mention here in a moment come online, we're going to have growing levels of takeaway options on the pipeline side, and then staggered based upon when those projects are expected to be completed. The first one that has a target in service date of late 2016, this was the Energy Transfer Partners. This project has grown in size from its original stated capacity, so they're now at 450,000 barrels a day of capacity for this project. Right now they're working through the various states, trying to determine the final route for that project. That is a 30-inch line going to Patoka, Illinois. The Sandpiper project, this is one that we've talked about several times, but again, just wanted to just have this information here. The target in service is early 2017 for this project, and so they're continuing to work through the Minnesota regulatory side in order to determine the route in that state. The new one that we have not discussed is the Trans-Canada, the Upland Pipeline. This was just recently made public. It's the 20-inch pipeline that would originate in western North Dakota and then go up to the proposed Energy East project. And so you can see Energy East is a project that originates in Alberta and goes all the way to the east coast of Canada. And so this majority of that system is already in place. It's a natural gas system, which is going to be converted to crude oil service with just over 1 million barrels a day of capacity. And so that would open up access to that eastern part of Canada. And then there's a couple port marine terminals that you see on that map that would open up the option for waterborne crude, either to potentially the east coast of the U.S., maybe by barge or some other type of marine transport. But so that would target some of those markets that right now are only being met by rail transport. So, and then the in-service timeframe of that was 2018 for both Energy East and the Upland Pipeline. So I get a lot of questions from folks when they start to look at these different charts of what does this mean long term. You know, they're trying to put hard numbers and estimates and things like that. It's difficult, and so I always hesitate to say we're going to expect X percent or Y percent on pipe versus rail, because again, future production levels, uncertainty, market conditions, project commitments, whether that's on a pipeline system or a rail system, and then regulatory uncertainty as far as even the timing of these projects. If there are delays in those expected target in-service dates, that's going to shift how that crude oil from North Dakota gets moved. If there's any changes in the regulations on rail transportation, that's all going to have an impact. And so it's very difficult, but we do know, we can say with certainty that it's going to change going forward as these projects go into service. On the natural gas flaring side now, switching gears to the gas side, as Lynn alluded to, again, increased gas capture. The only shift on the pie chart that I typically show is just on the orange side. So making some improvements, as Lynn alluded to, some of the compressor work in field, debottlenecking of the gas gathering network. And then again, keeping pace with the drilling activity, and that will likely become easier as the pace of drilling slows down, the completion slows down. That will allow those gas gathering crews a little bit easier time keeping up and getting ahead of some of the backlog that exists. And then just for full disclosure, this is the natural gas forecast that you saw earlier in the slides, the crude oil forecast. Natural gas a little bit more robust just because of where I expect activity to be located in the state, and just the way that these wells perform and the gas oil ratios. I don't see really in either case a real leveling off, at least even in the next 6 months or so. We still expect some growth, again, just because that McKenzie County, that real core area, does have typically higher gas oil ratios than other parts around the state. So with that, I'd be glad to answer any questions.
Have you been asked to weigh in on potential regulations from the Public Service Commission regarding conversion of gathering lines to transmission lines?
I have not. So the question was, has the Pipeline Authority weighed in at all on any of the regulations surrounding the Public Service Commission? And the answer is no.
Okay, I did have a question about widening spread, but I think you answered that question with your slide about future uncertainty. So unless anyone else has any other questions?
Well, you mentioned, if I may,
Yeah, absolutely.
about Sandpiper. When's the last time you heard anything from Minnesota in terms of their process and when they're expecting their process to finally, come to some conclusion?
The question was, have I received any updates on the Minnesota process with the Sandpiper project? Nothing newer than that 2017 in-service target date. And so the process, to my understanding, has been broken into two segments or two different steps in Minnesota. First is the determination of need. And the second step, if that they do determine there's a need for the system, then the route determination will take place. So they're still in that determination of need process right now.
Okay, we did get a question. Do you have any updates on Kinder Morgan's acquisition of Highland?
No, just knowing that, seeing the press releases, that I believe it's complete, but I have not heard how how that, the implementation of that in the state is going to take place.
Okay.
When the trains came to the, upland pipeline, would that affect North Dakota crude? Would it take any of that or just really? I see that red thing.
Yep.
I saw the red
So
thing.
the question was, the upland pipeline's impact on North Dakota. So it is a strictly, a Bakken U.S. portion system. So it would originate, in western North Dakota. Initial capacity of 220,000 barrels per day would be able to move on that system up to, either the Energy East project, or they're looking at additional interconnects in that area. So that would definitely have an impact on the region.
Okay. I don't see any other questions, so thank you, everybody.
Thank